Good day, everybody. Brian here from quantlabsnet.com. We're now going to do a first video on the rebranded Substack account we've had for the new domain of the orderbook.com. Sorry, the orderbookedge.com. All right, so it's the domain's been around for a couple of days now since today's July 8th. So I want to make sure to thank everybody that's joined this new venture. I'll bring it up on the screen. This is kind of in line with the Quant Labs Net, quantlabsnet.com, hft.co.com. So I'm going to try to walk you through in this video specifically for people on this new web domain called orderbookedge.com. So let me go over to our screen. So here's our screen. You can see the new domain here, the orderbookedge.com. All right, so the first thing, a couple of things is I still will be doing everything else as normal, no matter what I've previously said. If you want to know the process of how everything works on how I'm going to show you all the files, there is a video I did not long ago. This particular one here, it's about an hour and a half. So the search term when you go to Quant Labs, the YouTube channel, just look for how institutions use AI to trade futures and options. My 24/7 rhythmic pipeline. So this pipeline is what will generate all of the available reports, PDFs, and all the like spreadsheets that I'm now generating now for everything I do. Okay. So back here on the orderbookedge.com, if you go under the about page, it explains exactly why I'm doing this because there's a lot of people on Substack talking about indicators, talking about how they feel about trading. This is very specific for advanced traders, professional traders, institutions, and small institutions want to be. A lot of people talk about a lot of stuff, but the one few things they don't talk about is liquidity, volume, and specifically order book that drives everything in the futures market. This is not for individual stocks or retail forex, retail crypto, even though there is currencies and mainstream crypto in this, like Bitcoin, Ethereum, and there's occasional XRP and Solana. Just depends upon what's happening to that uh, cryptocurrency at the time. But that's what this is. Okay, I just want to highlight that. And again, just go under the about page. In here, if you're familiar with uh, Substack, all my notes go under here. I want to highlight for people that are not used to Substack. I think Substack's booming because of it. It's like an X Twitter tweet sort of thing that Substack brought out. It's very popular. I post my own uh, articles in there as well. I've also got my market analysis where everything pretty well goes into this, and also the tech, which is probably the programming. I'm not going to be doing a lot of programming here, and the like. But the thing I like about also that's very different with Substack is the podcasting and the video section as well, and live streaming as well, as well. So we can do all that if we want. Depends upon what people uh, want. The other thing is that Substack is excellent at discovery, so I can bring in new people into the this website, which is a Substack publication. It's fantastic for that. Okay, enough jibber jabber there. Um, so let's talk about the seriousness of what we're looking at. So if you watch this video to show you how these files get generated, again, this one and a half hour one, you'll get a quick idea behind the scenes what I can generate. So obviously this news report I'll be posting trying to do it every day before the markets open. Right now for this week, everything's open, fully transparent, so people get an idea of how things will work, what you can expect. So in here, again, futures and options only. This is a very critical document that everything is built off of for the freshest data. So you can see here, you'll get forex data, you'll get agricultural, because agriculture is going to be a big, big asset class in coming towards harvest season, probably starting next month. Interest rates, energy, crypto, and the equity markets as well, metals, crypto, and we like VIX is going to be a big thing as well for the volatility, and then again the indices as well. So in here, I'm just breezing through this. You can see there's about 20 pages. The critical thing that makes this really distinctive for a more on the institutional front is what are the institutionals doing? They will tell you this document will tell you exactly what these institutions are going to do, and it's both for the CME and the ICE or ICE exchange as well. Right now, I only focus on CME, but I will at some point start focusing on ICE because there's starting to see some opportunity with things like the DXY, the dollar index as well. So you can see here we got gold, as I said, but this is the important thing right here is what are the institutions doing? What are they setting up and why? Okay. So here, if you look at the options, which is the more important than the futures. People seem not to be interested in options. And we're talking about, again, options on futures, not options on stock. That's reactionary. And then from time to time, you'll see commodities outperform all of the stock, excuse me, the stock market indices. So there's that. So copper right now is kind of like the driver of everything, just so people know because of the AI boom. Even though if there's an expected AI drop in the US, I think China will still drive the demand um, for AI. UAE is building out like crazy. China's building out like crazy as well. So there will be that sort of demand still for copper, just as where we're at today, July 8th. So again, the important thing is the positioning from this document and what type of market participant is doing the hedging on puts if US stock rises. So there's the driver of this call, and these are the commercial participants. These are usually the participants and whatnot. Here for treasuries, we have again more positioning. You can see what's happening in the options. And again, you can see we have banks, macro funds, and what they're doing, and the conditions they'll make that call. Importantly, which is still a big one, obviously DXY, as I said, is on the ICE. Again, positioning corporates now we're talking. So there's very big players involved here that drive the price and the expected uh, target. Could be a month from now, could be a week from now, could be all the way out 6 months from now as well. And again, as I said, right here, this is the big one. I think agricultural. You can see here, institution traders are setting up conditions for this as an arbitrage trade between longing ZC, ZW against shorting soybeans. Okay. And again, there is the VIX as well. You can see here the cross asset correlation, blah, blah, blah. I could go on and on about this. And then there's a specific one if you're into Forex. You can see right here is a big one for Forex futures and options. And when I say options, this is not some binary option garbage. Okay, we're talking about real options on the CME in the futures and options market that's heavily regulated by the CME and higher regulatory bodies that regulate CME itself. So you can see here, all of the positionings very, very important, including things as simple as the Polish zloty, the Swiss franc. Uh, again, commodities, oils, obviously a big one, and so on. Okay, I just want to go over the big ones that most people will want. So here again, actionable trades, and the other rare thing that people do not see is the actual target, the actual hard number target, okay, for in this case, the Australian US dollar. That's what makes this very valuable, and that is what makes this eventually very pricey to know these sort of things. The other thing is that when you ask people why is this number here as a target, they don't know why because they don't understand the uh, equivalent of code behind to understand the logic on why these numbers get generated as targets. Again, you can see here we got volatility, the yield curve, really institutional level things that will impact the retail market. Okay. So again, I'm just as I said, I'm just going to scroll down to the showing you the retail. That's a retail forex is where all of that is driven by what I'm showing you here. Again, the AI call, and again, this is pretty well the stock market of the AI tech capex, the news drivers, and what they expect. Not just futures and options, but there's also ETFs that are mentioned as well, like big ETFs, and in this case, SOX Index Futures Semiconductor ETF proxy used for arbitrage as well. If you're trying to learn this sort of thing as well for career to get into those big um, uh, pay packages like portfolio management, that's where the security is. The AI is not going to take. I don't think the AI is going to take out a lot of the big portfolio managers. I just don't see that. So again, this is very critical. You understand this to ensure that you can talk the talk when you eventually get into more advanced interviews with portfolio managers and multi portfolio managers. If you don't know this stuff, you're not going to get the job, or you'll just stay stuck in the junior levels. And I can assure you that a lot of the Asian folks that I've talked to and seen, they're eating this stuff up. So there's a lot of competition out there for this type of knowledge and experience to understand things like skewed trades, correlation, risk, what's going to happen here versus that there, and they're going to challenge you on that as well. And you can do that via AI as well, prompting AI for those kind of questions. Again, let me just show you the crypto here. So you can see here there is technical analysis, but that's uh, kind of like a joke, I guess you could say. So here's some Bitcoin analysis here with the MicroStrategy liquidation risks as well. Um, and it just goes on and on. You can see here it covers CTA, macro funds, what they're doing, how they're positioning, and why hedge funds specifically. And again, a lot of it's going to be in the options strategies. If you do not understand options to the lower level, that's where a lot of the quant is done on the formula side as well. So this is one of those very critical, very critical areas to understand, and it crosses all boundaries within the financial space. Okay, so there's that. So what comes out of that is a lot of other documents, and again, you can watch that video, but I've not gone into detail like that with the news. So I'll provide that as part of this new site here every day, the Order Edge, the orderbookedge.com. Okay, so I'll provide that one file. The other file I'll provide is this is the latest generated. And just so you know, this is the process, the pipeline that's generating all these files, all this stuff. It's downloading the latest market data from Rhythmic and only Rhythmic, as I've explained before, versus Interactive Brokers. Also, we have options downloaded, futures downloaded. It back tests literally thousands of collected bots since mid-April to see which ones are the best performers as well. Again, that 90-minute video covers all that. I don't want to do that, but I'm just showing you what you get with this membership. The other thing that you get with this membership that is just as critical to filter out all that noise and BS. I can provide a lot of data, but I'm going to be honest with you, a lot of people will not go through it. They just want something simple like this document I'm about to show you. So basically, what this is a market preview before the market opens. Again, most of the volume is driven um, via what's happening in the US, namely more Chicago, because that's where the futures and option operators are, including the CME itself. So here is the pre-market. We've got right now in the collection of strategies, bots, 279 that are profitable potentially. And out of that, there's only a certain number of that can be deployable. I'll explain why. This is just a sampling of the profit you can do for one day. Okay. Um, so this was generated last night. Okay. July 7th at 1935. Um, and again, here's the news drivers, what drives it for that precious news when it's generated. Okay, so it covers everything again: crypto, equity, energy, precious metal. It also includes fixed income, agricultural, industrial, and currencies or FX. Okay, so here is another important event here that will drive certain instruments based upon these major events. So you can see what is going to happen. This one cryptocurrency on World Cup prediction markets, World Cup stuff on the then we have OpenAI as well. That's going to drive something somewhere. In this case, OpenAI 5% government will drive something in one of the equity markets. Again, these are the very important. Let me go to this. So, one of the things that people need to clearly understand wherever you are in your journey on trading, liquidity and volume is really, really important to understand. Okay. So, one of the things that people need to figure out very quickly is liquidity. So what I've done is, and everything I do is by literally by accident. Okay. Here, if you go to bar chart and you do a Google search or whatever your search engine is, and just do bar chart most active futures, you'll come to this table. These are literally the most liquid at this point. Today is right now 11:31 Central, so we're in peak mid uh, midday trading, and you could see the most active, highest volume of traded right now as the markets are fully open. Nasdaq, the 10-year Treasury note, S&P, another bond, uh, Nasdaq, crude oil, very, very, very liquid markets. Okay, so you can see here the volume, and anybody could see this, do the comparison, but you could see here most of the volume right now is in the Nasdaq and probably shorts being lined up. Plus the defensive trades, which are also getting killed, is the 10-year note, 5-year note, Treasury, and the S&P as well. Okay, and everything else is kind of much smaller. So this is a bloodbath. Well, not really bad, but it's not a good market today. I'll show you why. But coming back to this report, we use this as the golden standard to only focus on those instruments that are trading with a lot of volume. Okay, explanation here. And again, I have some other posts on the website, uh, the Order Book Edge of recent at this point on these documents. So you can get samples of this at that time. So you can see here, these are the top strategies. And again, we have 249 and 50 are deployable. So these are the most liquid at this point right now, profitable or not, because you let's face it, if you got the shorting experience, those strategies can do very well. I've done an analysis a few days ago, and if for June, everything was not good in the markets, but if you were shorting Bitcoin, you would have made a lot of money because shorting Bitcoin would have been a very predictable move. And I'm sure people did it, and the professionals know that and can make a killing there. So again, what we're going through is to look at the profitable strategies at this point. Again, this what you're looking at is before this call it down market. You can see here a lot of red in the markets. So this is Yahoo Finance just right now in real time. Everything's down. Okay, so we'll go over that in a minute. So right here, in this report, we list out the top strategies and we also classify them if it's an equity, crypto, or forex. Okay. So here it does a sector by sector. Now, personally, my setup is longing only. Okay, I'm just not that experienced and not that comfortable to go shorting. Shorting is very high risk. My account's too small to take that risk. But one that has been fairly consistent has been copper. Okay, so HG copper, and here's the reasons why. When you look at the headlines right now, this is what's driving down these kind of trades because the U.S. dear leader wants to take over the island in Iran, plus blah, 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 blah with Iran. So everything takes a hit, namely oil. I'm sorry, oil goes up. We'll see that in a minute. So there's that. So this trade for copper is down, okay, because of this. So this is a typical unpredicted um, exogenous event, external, that we can't predict. Never can and never will because we're not the gerbil in that's spinning in our dear leader's head. Okay, he this I got my opinion, very strong opinions of it. I'm not going to do it here, but this is what drives this unpredictability for now. Okay. And that unpredictability is going to get worse and worse as more and more domestic conflicts and blah, 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 blah. Okay. So there's that. But when you look at overall, copper's down 2.25, but oil is up because of that, because of that panic trade in oil price. So let's go back to our document. So again, traditionally, copper would do well and would continue to do well as I posted in here yesterday. Let's see here if I have it. So I talked about CL um, and why it will go up, and this article here will go up. Why? Because, as I said earlier, of the UAE catalyst. Okay, because UAE is hungry for data centers, for AI data centers. Okay, and copper will, over the long term, continue to be driven up, and that's just one country. China's the big one. And any country that needs these data centers is going to need copper, okay, for the servers. Okay, so that's why that trade, I think, is probably the trade right now to get into from a longing standpoint. So you can see here, these are your drivers here that will mention that. But here, as part of our lot, we have various strategies that are involving copper, AI demand breakout, AI demand call spread with options. Okay, so we have other options or choices, I could say, for copper. Then you get into gold. Right now, gold should be shorted, and you could see in Yahoo, gold is down right now. So that if you took that, it's just by luck. But generally, there's a lot of volatility, surprisingly, in the gold price. So gold, I don't know. I don't think I'd be involved in gold right now, and unless there's something that triggers gold to continue to march up. And part of that problem is the manipulation from the exchanges. There is that. I mean, that's been confirmed by gold suppliers as well. Now, here's the interesting one: is the CL long, which is oil. So again, as I showed earlier, this oil has gone up 7%. Now, this is just by sheer luck on the timing. If you did take that call, you'd be doing very well right now. You'd be up 7%. So, all of the logic, all of the news drivers, which were not caught before this thing happened with the U.S. going after in the Mid East, so that was not caught. We're generating a new report. I could hopefully see it as well. So this continues along, looking at the landscape. So basically, just so people know, is this sector analysis is that there's various strategies you can use. I can't give them away. I mean, I could give away the logic. That's where the value comes in as well. To generate a trading bot for your environment. Everything I do is in Python, and let me just talk about that here. So when it comes to the trading bot, the coding and stuff, part of me, we've got probably 2,000 strategies, bots, whatever. whatever you want to call them, able to go. I can take out and do an AI analysis on the strategy itself. I could run it in real time against market data as it happens while the trading's happening and give me an analysis. I could also build out additional features in that particular bot to add in tightness, more tightness on stop losses and the like as the markets come in to improve my profit potential on that bot for that particular day. That is very possible to do in Python specifically because I'm trading in Rhythmic with market data from Rhythmic and the order execution in Rhythmic. If people know, there's very strict terms of service there that I cannot talk about pretty well anything there. From a market standpoint, yes, I can show the math, also the trading logic and rules. No problem there. But to build out the code is another issue as well. So there's that to to consider. And there's hundreds of strategies involved. Like again, watch that 90-minute video on that. And that can be said for any of these strategies, okay? Just so people understand where we're at. So we have a risk and return efficiency sector, which is pretty well a lot of traders will use risk versus return. And that can be done kind of in real time as well. Now, this is the really important part for this whole website. Okay. It's one thing to understand what to trade, but the strategies that are applied and trading rules will be different for each asset. So there's particular trading rules that will continue to uh, impact the price built around those trading rules in a strategy, or as the youngins call it, the trading bots to sound cool, I guess. Anyways, coming back to the screen here. Yeah, so there's things that need to get adjusted in real time. That can be done easily with AI. I have tried to do it with C++. Again, I've talked about this as well, just so people understand the difference between high frequency trading and something like Python or mid frequency trading. If you want to do high frequency trading, you're going to have to be in the Aurora data warehouse that's run and owned by the CME. Okay, they have that's where all the high frequency trading happens. Or if you're in the NYSE, you're going to be in another warehouse for that. You're not going to be being piped in via interactive brokers and whatnot, because those same HFT operators will take very big advantage of interactive broker orders and the state of the orders as well. Same to be said for all the big retail brokers. There's going to be people arguing about it. I've been there, done that. I don't do it anymore, but it just I hate to say it for people out there. It's a fact. All right, so that's all there's to consider. All of these strategies that we're talking here, I can make potentially them available, but it's something I have to consider very carefully, and it will not be cheap because this is really meant for trading. Like as I said, pro traders, advanced pro traders with larger accounts, and we'll say institutions or smaller institutions. Anyways, if you go to my website here at hftcode.com, I have here for anybody that wants to learn about algo trading, no matter where they're at. It can be in, this is built for interactive brokers. There is no excuse now not to be able to get started. I've purposely built this out for people to be able to use this package for dirt cheap. That price is not going to go up. If you're not using this, you're going to be spinning around like a gerbil. Okay. And you'll be chasing after shiny toy after shiny toy. This will break that cycle for you, because in here we've got working copies of code in Python again for interactive brokers using Trader Workstation, some sampling of very simple technical analysis coding that works for some stocks, for a forex pair, a gold, and as well, I believe there's crypto as well, but it's all working against the TWS. Okay, and then this is the powerful part, is that it's built for the number one AI tool out there for Claude, And there's lots of examples and how to prompt, which is the important part I'm finding people are failing on is the prompting because they can't generate stuff what I'm generating with, or sorry, vibe coding the this code because they either don't have the experience to be able to get out of bad cycles in debugging and not being able to finish the job. That's what I can do. And I do that with now, even with some of the Chinese models as well, the cheaper, more affordable ones versus Claude. Okay. So that's available if you want to learn about algo trading. And from there, once you build out using this type of use, you'll quickly understand, and especially it has to be from a working code base of something that actually works. And you just turn on from the paper trading to actual live trading with interactive brokers, and you just build out what you want using interactive brokers. It's fine for retail traders, but when you want to get more advanced uh, into uh, something like what I do now with the futures and options, really geared towards institutions. You want to go onto this website. And again, even if you're doing career stuff, you've got to know this stuff. And it's very, 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 it's stuff that's going to get pretty expensive. Okay, I'll just leave it at that. So that's what you're getting with this. For you can get these two documents here. Let me just finish this up. So there's going to be some strategies that are not going to work, even though you think they'll work. So it analyzes that in this matrix. Plus, the more important thing is what not to trade. Even though you have certain trading strategies in play, there's particular ones that are not going to do well. So here we have the one-hit wonders, like silver as an example, the underwater fleet. You know, if you were trading gold between November until a few months ago, you probably do well. You're trying to do that now, well, you can't apply those strategies. It's just the nature of the market. And as I said before, and I've said it again, this is not going to be your grandpa's typical recession. This is going to be something never seen before. When the national debt's getting out of control, we're going to have a lot of volatility. And more importantly, that people need to understand is we're going to go into a very range bound market, meaning there's not going to be a lot of uptrend where the easy money is going to come in. I strongly believe we're going to go range bound. And the only way to make money is on a mean reverting type of strategy. So this system that I build out, or whatever you call it, will adjust for mean reverting and build out more mean reverting strategies and more up to date that will adjust to the market's mean reverting strategies as well. So again, we have the underwater, the stale strategies that are just pretty well useless. So again, there's all this misleading BS out there. So if you see people saying that AI works, just generally, I'm gonna sit here and say AI does not work, but you have to add in layers upon layers of filtering to be able to remove all those what you think will work. As I said, the capital destroyers, and remove those. So we go through multiple levels of filtering. So again, if you watch that 90-minute video, and this video is already half an hour, you could see from a high level what to trade and what should work for intraday. One thing I forgot to mention is this is intraday only. If you have a large account in the hundred, probably 50,000, maybe even 100,000, and you can afford the margin requirement to hold open positions going into the closing market of the US and then into the overnight market, you can do this. If you don't have the funds to hold overnight margin requirement because that skyrockets. I don't know if that's a rig system. I don't know, but that's where we're at today. It may change in the future as everything goes 24/7. That may change. But right now, if you don't have the funds to meet the margin requirement, all your open positions will be liquidated, which is, can be a strong chance of driving down your account to losses. We'll just say that on top of you'll be charged these fees to liquidate as well. And apparently they're very excessive. Okay. So that's what is important to understand that you will if you go down this path like me with a smaller account, you will have to close out your positions and be, I hate to say, a day trader. If you want to trade overnight, that's what ETFs are for. That's what stocks are for. I already do that through a professionally managed portfolio. I have nothing to do with it. I could, if I was doing that, I wouldn't be able to do what I'm doing here. And I also know that this is way more lucrative than the um, traditional way of doing things. Okay, just so people understand that. All right, so then we have the closing assessment on what may work. But this is the important one right here is today's market. Okay. What's happening in the state of Hormuz? Will that become a contagion? Plus the insurance and the effects of that on the liquid gas, sorry, the natural gas and other types of oil, distilled oil. Okay. So, knowing all of this in real time as we still wait for this to complete, um, I don't think this will get completed by the end of this video. But those are the reports I send out. Okay, so that's pretty well it I can put into the overall um, market here. But if I go back and let me just read off the about section here. Um, yeah, so under the about, let me just go back to the screen as a wrap up. Here's the thing. Right now, we have current rates, but everything's going to go up to at least the minimum 97 a month. And then for other insight, namely like option chain analysis, which we can do and build upon that, that's going to go up into probably I'm looking about 300 a month. Why? Because there are people willing to pay that. I know that from competition, but they will not have the value and the insights that I can offer because all the coding's there with the Python ready to go if needed, or at least put you on the path to learn how to do that on your own. But I could also maybe build out the prompts to be able to build this out, or maybe I can give the logical trading rules as pseudocode that you can feed into a AI to build that out. Okay, so let me go back to the screen here as a wrap up. So far, thank you for watching. I do ramble. We're coming up to 40 minutes. Anyways, here's the about. So again, this is not what it is. This is what the orderbookedge.com is. It's not a thing you watch on Twitter. It's not something you learn about some magical indicator, as I said, because of volatility. These are people just selling you garbage in the hope that you'll be a sucker and buy their stuff to feed their pockets, and just it won't work after 2 days. Some people will say it works. That's great for them, but majority of people I've talked to that spend literally thousands of dollars on stuff, it don't work. And as I've shown you in just 2 videos, including this one, that's why there's the edge, the advantage. So again, the other thing, this is not retail education anymore. I should mention this as well. On my main site here at quantlabsnet.com, again, I can't really promote this on Substack. That kind of would would kind of go against their terms, but I'm just putting it in this video as well. So if you go under more courses, at quantlabsnet.com. You should opt in for that as well. This course right here, this price is going to go up to nearly well $5,000 basically. This is a 26-day course. And what that is it just walks you through all of the advanced, starts from the basics of what options are, what options are, and it builds out a very, very advanced variety of strategies. It is built off of a UCS Davis course that is a traditional mindset for futures and options. And all I've done is just applied AI to it and just brought it up to date because the course itself is very old. The principles are all the same. The same principles have been in place since last 100 plus years since the futures market has been started in Chicago. But I've just modernized it and added on some coding samples as well, other references to go to really dig down deep about futures and options. But at the end of the day, this will give you the framework of using and what I'm doing. as well. All these other courses I'm going to remove because they're just trading view. Nothing wrong with trading view. I like trading view, but again, it's very strict on what I can do with trading view. Um, there's certain things I can do on Substack, but if you took this course right now, that's up to you. I don't push people what to do and what not to do. Okay, coming back to our the order book edge. So that's kind of what this is not. Again, everybody works off of the typical breakout technical analysis. Yes, I hate to say it's BS. Technical analysis only works uh, for timing positions. What we're doing here is to know what positions to highlight and the logic from market conditions and namely news drivers that will put us in the place to use technical analysis. Very important to understand. But what really sets up the market are these participants, dealers, there's sometimes forced execution, liquidity imbalances. Like that's where your hedging and your arbitrage comes from, and that's what a lot of the high frequency trading shops will use as your inefficiencies in the markets. When you hear that, the other thing is using order flow pressure that, as is shown in the news PDF, that's where and why the order flow. And I always say, if you want to make money, real money, the most lucrative type of investing, the most lucrative type of short term, long term trading without having to take your medication because of the stress of it, um, you watch where the hot capital flow goes. And what I've shown you is in that news uh, news PDF, structural constraints as well. So again, we know 80% of the market's electronic and built around that. As it says here, if you don't know the order book, you're just trading blind. Okay, so these are uh, who it's really built for. I'm going to say advanced algo traders in the futures market, option structure traders, and those are the big trading shops. I've talked about solo quants that are doing very well. For them to help understand this. There's a lot of independent prop style operators, engineers wanting to build out trading systems. And what's very critical is to understand how the markets work. Primarily, if you don't understand how the markets work, how to trade, everything else is useless. You're just going to be a servant to everybody else because it's a portfolio managers that watch this stuff. Excuse me again. So we're talking about coding and math, okay? It's really the portfolio managers that really drive what's done in a trading shop. So that's the primary thing you need to clearly understand. And the engineers building those trading systems are just kind of like the lower on the lower echelon. They're not the top tier, okay? And then there's the developers transitioning, not the quant coders, but wanting to get into the general quant markets. Again, this is what it's not for, okay? Signal seekers, indicator collectors, Discord chat traders. I got off of Discord. It's horrible with the spamming going on there, and gamblers looking for entries. Okay. Yeah, this is an important fact here. Where should I enter? Okay, you're early. Okay, if you're asking who is forced to execute here, this website's for you. Again, we focus on things like bid ask and balance, liquidity stacking, absorption dynamics. And again, most of this is done in the options market. Q priority mechanics, depth shifts, and volatility expansion. So again, that is in the markets. And out of that, strategy is built for those particular scenarios. Again, most of the volume, again, when you again look at bar chart, most of that volume, it doesn't matter which side of the market it is, if it's long or short, the biggest drivers will always be the US indices, being NASDAQ and S&P. That's just, again, how it is. Okay. So again, ES, NQ liquidity, open auction structure, intraday regime shifts, and structural breakdown zones. So with the execution, all this stuff, algorithmic, algorithm, algorithmic, especially as I said, the backtesting blind spots. Those are the areas that you're not good. You're going to get killed on. Unfortunately, because of the shown some of those bad trades that you think are doing well, namely up here in the capital destroyers. Okay, that's what we're talking about there. Um, so there's the different architectures, trade-offs, and so on. So trading is an engineering project, and engineering requires structural understanding, and that's structural understanding, not of coding, but structural understanding of the markets. Okay, because I don't care how much of a C++ expert you are. I don't care how much of a mathematician you are. What matters is the structural understanding of the markets. Everything else, as I said, is just a derivative of the structural understanding based upon the bid and ask, and that's the order book. Okay, so here we're not selling trade signals, indicator settings, entry alerts, or high probability. What we're trying to identify here are liquidity shifts, execute the trades, if structural inefficiencies exist, and execution change outcomes. So what we're looking at here is arbitrage is a clear one, and the execution outcome. So again, you can see execution beats prediction, structure beats opinions, and that's important too, because when you go on to YouTube and when you go on to all the other social media, it's just opinion. Unless they have a track record and a verifiable third party track record, that opinion is pretty well worthless. And I don't care what their experience is as well, because whatever their experience is from a trading shop or trading operator is going to be very different from what they're used to being with this high unpredictability that's coming, and because of what will be the eventual outcome of the national debt that's never been seen before. And I mean, look at gold. Gold's not producing the way it should. Why? Because of the regulators and the operators that are manipulating that. Okay, 97 a month. And again, there's going to be other tiers going up to 300. I'll introduce those soon too. So that's what we're doing here. Um, and hopefully you can join. So right now, the price is current, but I'll put in a new pricing structure that's going to be much higher than what it is. But if you join before that, you get locked in. Good for you. All right, we'll leave it at that. Thanks for watching.